Hi there, welcome back. This is Markus, the financial accounting tutor again. And we're about to look at an inventory problem. Inventory can be very tricky if you don't know what it's doing, but if you follow these steps that I'm about to show you, you should be able to tackle just about any inventory problem. So a company had inventory on November 1st of 5 units at a cost of 20 each. On November 2nd, they purchased 10 units at $22 each. On November 6th, they purchased 6 units at $25 each. On November 8th, eight units were sold for $55 each. Using the LIFO Perpetual inventory method, what was the value of the inventory on November 8th after the sale? Okay. And then, so the first thing I do when I do inventory problems is I want to figure out what my cost of goods available for sale is. So to find that out, you have to add up all your purchases. So let's put this down. So we got November 1st. Got November 1st. And then we got November 2nd. And then we got November 6th. We got November 8th. Okay, so we don't want November 8th because that's the sold amount. We don't want to worry about that just yet. But let me just put it in here anyway, though. November 8th. Okay. Now we've got 5 units at $20. Let's take these percentages off of here. Don't need that for this problem. Let's change this to general. Oh. Okay. On November 2nd, we purchased 10 units at $22 each. On November 6th, we purchased 6 at $25. All right. And then November 8th, we sold. Okay. So now we need to take our units times what each one is worth. Take those times that. And then we need to equal and sum up all our purchases because that's the first thing you want to do in an inventory problem. So this is cost of goods available for sale. Now, cost of goods available for sale and cost of goods sold, they're not the same thing. Cost of goods available for sale is all our purchases added up. Cost of goods sold is when we sold something, we have to attach a cost to that. I know it might sound a little bit weird, but they're two different things. Just remember, cost of goods available for sale is when you add up all your purchases, and that's how you want to start every inventory problem. So now that we got a cost of goods available for sale now we have to figure out what our cost of goods sold is. So we're using LIFO Perpetual inventory method. So LIFO stands for last in, first out. So that means we're going to start with our last purchases and work our way up. So we're going to start with the November 6 transactions. So how many units did we sell on November 8? We sold 8 units. So we have to go up to our first layer, which is November 6, and we need to take 6 times 25. Okay. So this is going to represent our cost of goods sold. All right. So we sold 8. We've already accounted for 6 of them. So we got to account for 2 more. So we need to go up to our next layer, which is November 2nd. So we need to take 2 out of this 10 because that's going to get us to 8 units. So it's going to be 2 times 22. All right. We'll add up these numbers. That's our cost of goods sold. This is cost of goods sold. Now, all we have to do is just take our cost of goods sold and subtract it by the cost of goods available for sale, and that's going to give us the answer. Because cost of goods available for sale equals cost of goods sold plus ending inventory. And we're trying to find the ending inventory. So we just got to take the 470 minus the 194, and we got 276, which is going to be E. This is how you want to solve every inventory problem. You want to find your cost of goods available for sale first, Add up all your purchases, find your cost of goods sold, and then take, if you need to find your ending inventory, you're going to take cost of goods available for sale minus cost of goods sold. That's how you tackle all these inventory problems. The Financial Accounting Tutor. If you need any more help, just reach out to me. It'll be in the description.